Yo, what's up? It is January 24th. Let me play the intro music and then we can get started. It's about a little over 15 minutes until the close. All right, guys?
GETCRACK. Wake up, motherfucker.
A big claim that he is trying to make there. Can he actually do anything? I don't think he can.
Yeah, it's a dangerous conversation in terms of, but it's not political. But the Federal Reserve controls the front end. They lowered rates in September. The front end of the curve has been sort of stable. They don't control anything past that. You would think, I would hope the president would know, or people in his cabinet, administration, in his circle would know as well. The interest rate market is going higher for a myriad of different reasons. By the way, not least of which, some of this policies this administration is looking to implement.
Yeah.
Yeah, boy, this seems like deja vu. I mean, we've had this kind of joust going on before, I think, between the Fed and Donald Trump. And it's interesting. I mean, first of all, I'll say this over and over again. One of the reasons why that little blue book you carry in your back pocket called the U.S. passport is a very special thing is because of our central bank's independence. And I do think that the Fed at least somehow can control inflation, which I think is really depicted on some level through the long end of the curve. But we're at a place here where I think everyone's very aware since the Fed started cutting aggressively. This is one of the first times or the few times in history you've had this kind of a sell-off in rates, especially at the long end. And that's really actually what we're talking about. And I would make an argument after some oversold conditions in terms of bonds, so upwards in yields going into that CPI print that we got last Wednesday, I actually think we're still very much in an uptrend. And I think this is something that's going to be a bit of a head-on. This is all happening, by the way, while liquidity seems to be just going everywhere, and a dynamic at least around some of the early round of policy statements and some beginning of some follow-through is none of this is good for the long end of the curve, as we say. So it's, markets are at all-time highs. There is, if you want to just think about, hey, if we can force down rates and if we can force down lower oil prices, this is great for the economy, but it doesn't work like that.
You can argue that maybe he has a little bit of I don't want to say power. I don't want to go that far, but he could possibly job on oil prices. But in terms of the Treasury market, it's just too big and too deep for him to have that effect. So there could be a difference between just saying that you're going to demand lower interest rates versus I'm going to make them come down, which he stopped short of saying that.
Right, unless he's what he really meant to say was totally talking about the near end of the curve, and I'm going to put as much pressure as I can on Jerome Powell, and so we will see the near end of the curve. But just what you're talking about, that you push on the near end of the curve, right. And what's going to happen when you go, he doesn't control 10-year rates. He can yell all he wants. He knows this. So part of the reason that he won was to talk about inflation is too high, too high. It hasn't been tamed since November 6th. So, he's wanting to play both sides doesn't make sense.
Yeah, I mean, these guys have covered it. I mean, if the yield on the 10-year goes higher, despite him talking about the Fed funds rate going lower, what is it speaking to? It's speaking to, higher budget deficits, higher inflation expectations and the like. And so really the only thing that Fed funds going lower does, it kind of gives a better chance that inflation gets restoked. And, the other thing is like, he's going to have a really cozy relationship with the Saudis. And I know we're going to talk about oil later. They don't want oil to go lower. You know what I mean? So there's a lot of things set in place. If anything that's happened, a lot of things have gone up since November 6th, oil being one of them. It was trading above $80 just recently, and I think over the last year, the average price was probably somewhere around 70, right? So there's a lot of moving parts here, and I think jawboning is really, not the way to achieve the policy goals that you want to kind of see happen for a lot of this kind of legislative priorities that you have and the priorities for the country and changing the direction, and that's one of the reasons why he did get elected.
Yeah, but, some of the policy discussions that are going on and probably have to go on in earnest are tax cuts and really what can happen in terms of extending the 2017 tax cuts. But there's some horse trading going on. And we're reading today about SALT, state and local income tax, and the dynamics that are really important in some blue states, though, who have some pretty strong, I think, senatorial Republican support. And there's an argument that there already are places where some of this is net budget unfriendly. I mean, there's no question about it. So it doesn't mean salt taxes are going to change the prospect for the Treasury market. I'm just saying that the entirety of all these conversations are ones that don't help. Meanwhile, you also have around the world. I mean, the ECB. I just want to point out there's a lot of folks in at least in the futures markets are betting on a 50 basis point cut by the ECB sometime soon. So the dynamics here in terms of what central banks are doing and the impact and some of those differentials, I don't know if it's going to help the cause in the U.S. I actually think it could push Treasury rates higher.
We're going to see, I think, February 4th, how the Treasury Department is funding all of this. Mm-hmm. And the front end of the curve is so much deeper, so you can place a lot more money, but more risk.
Right. Yeah, so the last part about it was the Treasury funding rate. So when Yellen was Treasury, right? She's gone now. And she did a lot of T-bill issuance compared to long bonds. So right now, the government funding is on those small, short duration T-bills. They're going to have to pump out more long bonds, and that's going to put pressure on interest rates. So yeah, Trump can talk about lowering the interest rates, this and that, but yeah, Fed eventually will lose control. Depending on how the Treasury Department actually works too. So it's going to be interesting. It's going to be a back and forth, and you're going to see it just like 2018, that whole era of 2018. All right.
More on all this, let's bring in SMBC Nikko Securities Chief Economist Joe Lavorgna. He also served as Special Assistant to the President and Chief Economist of the National Economic Council during the first Trump administration. Joe, always great to see you. I don't know if you still have a Trump decoder ring or Rosetta Stone. Or what do you think he means ultimately by the things you said about interest rates today?
Well, a couple of things. One, I heard everything everybody said, and the tariffs are not inflationary and less immigration aren't inflationary, but we could get to that. What I heard the president say is, look, we have high inflation, which is why interest rates are high, and effectively to get inflation lower, rates will fall. Rates are too high because inflation's high. And that really is sort of the Fed's responsibility. The Fed cut rates 100 basis points, and yet long rates went up more. And it was due to risk premium associated with Fed policy, where they should not have cut rates in November and December. Those were mistakes. It will make it more difficult for the Fed to get inflation under control going forward. So I put this squarely on the Fed. And that's how I interpreted President Trump's comments this afternoon.
Why do you think immigration changes in immigration policy and tariffs, why are they not inflationary? Can you just explain that to us?
It's very simple.
Very simply.
A tariff is a price level adjustment. Inflation is too much money chasing too few goods. Related to that, labor, wages do not drive inflation. Too many people working or too few people working has nothing to do with the inflation process. This is twisted Phillips curve ideology, which has not worked and not served the Fed well at all. So again, neither tariffs nor labor.
Whoa. I didn't expect that. Okay, this guy is really unorthodox. So I don't know how much you guys know about economies, economics, Phillips curve. So this dude is going against the grain, all right, from mainstream economics. So I didn't expect this on CNBC. All right, let's go.
Cause inflation. Too much money chasing too few goods, meaning it's a monetary phenomenon. Excess money and credit creation is what caused inflation.
Do you think that the average American, when they're faced with paying 10, 20, 25%, whatever it is, the surcharge is going to be on whatever goods they purchase as a result of tariffs, higher prices, that they will not perceive that as inflationary? They are spending more money on the same good, even just by perception.
Because you're looking at the tariff in isolation. You're not assuming that there's any offset from a stronger currency. You're not assuming there's any offset from that cost being absorbed in the margin coming from whoever is exporting to the U.S. And you're also assuming there aren't lower energy costs, because the tariffs are the incentive to bring production here. So you've got the tariffs, which are part of the process to incentivize companies moving here, in addition to low energy costs, business-friendly regulation, and corporate tax rates that go from 21% to 15% for domestic producers. In that world, that's a supply side shift. That is not inflationary.
Hey, Joe, first of all, it's great. I think you're making arguments that I think are important and certainly in opposition to what a lot of people are saying, including, the IMF points out that if they just throw a blanket 10% tariff on the rest of the world, that's, whatever numbers you want to put on it, but different economists are putting different economic drag numbers on it. I care less about that. I care more about the comments you made about, this is really in the hands of the Fed, and you actually think that they actually moved too aggressively already. Talk about that. And do you think inflation is a problem? The bottom line here is you're right. The point is to try to identify, hey, inflation's too high, it needs to come down. However it happens, whether it happens, I don't know. But it sounds like you think inflation's a bigger problem. And if it is, I'm going to just say that I think equities are really on the wrong side of that.
So the market's excited about President Trump's policies. You see that in small business optimism. You see it in CEO optimism. But the Fed ultimately controls inflation. When the Fed cut 50 in September, which I was in the minority, I was of the view they were going to cut 50 because the labor market at that point in time looked very soft. I thought the economy might be weakening quite significantly. Maybe there was a political element to it. I don't know. But certainly from an economic perspective, one could have made the argument the Fed should have cut, and they did. But by the time we got to November and December, that no longer was the case. And therefore, I think that was a mistake that hurt Fed credibility. If you look at consumer expectations of inflation, Tim, they're still pretty high. So I think the expectation is, having gone through Trump 1.0 and having a good economy, GDP nearly 3%, inflation 2 or less, that will get the same outcome. But when you look at inflation expectations, they're high if you look at the University of Michigan data. And if you certainly look at various inflation metrics, even the CPI last week, the core people got excited about, that's still annualized on the month to 2.7 rate. That's still 70 basis points higher than where we were. So for the president's policies to be successful, which I expect them to do, we certainly need those energy costs lower. Energy is much more important to the economy than tariffs. It has a bigger weight, and there are significant indirect effects that come from lower energy costs, which obviously immediately will lower inflation and increase real wages. But the Fed, I blame a large part of this. We saw the Fed do extended QE for quite some time, and they were way too slow to hike, and I think they've damaged their credibility.
Okay, guys, we got 5 minutes till the close, and let me show you what I'm watching for, and then I'll play another video. So, MSTR, right? Last night. So luckily, when we were on our break, I didn't need to tell you guys what to do, really. So, from this point on until most of the last week, right? Monday to Friday, perfect. And then we came back for Martin Luther King, and then that's when you started seeing trouble. So on Tuesday, I did a little short. All right, I used MSTZ to short it. MSTZ, the ETF that tracks two times the percentage losses of or inverse, all right, of the MSTR. So if you were using MSTX, you go reverse and use MSTZ. So MSTX, you would have got about 60% from here to here if you got all the way through. Now, obviously, I don't do that. I'm just going to start selling along the way, bit by bit, until I get to my range that I'm looking for, which is around 60. I was targeting 60 as the top. So once it did this on Tuesday, you see this move here. Big drop, try to climb up, and then closes on that drop. That's already a signal for me. Oh, time to short. All right, so I got in just before the close, like here in this last hour. I was just like, all right, time to short with MSTZ, and then I got this. So I'm pretty much halfway done. I got out like half of my position here. Now, that's a risk, all right, because Bitcoin could still, have risen that week, but it didn't. I could tell it's going to be stuck in a range. And MSTR MicroStrategies, like stocks like these that track Bitcoin, they're not going to like it when Bitcoin goes sideways. Like if it sees weakness, people will just start selling off. And you already can tell, like with the QQQ and the semiconductors, like by the end of the week, it's already weakening. So I was like, okay, get in here, right? Get around like $12, $13, add when it start adding here, if you wanted to increase your position, be like, oh, okay, look, if you look at here, all right, MSTR, you can look at the volume. This volume on this green candle on Thursday. This one here, you see it tried to push through, and you got the two lines. I got 176, 138. So this area is important. So it tried to push through, but after the whole rest of the day, it just faded. And then on Thursday, you just got this last closing on Thursday. You end like this, and then you open on Friday like that. You probably could have added today this morning. You could have been like, okay, I'm just going to keep shorting more. And then you end up with this result. So I'm halfway done. I'm halfway out, all right? I have some leftovers. But I'm not going to be too confident. It's a weekend. Anything could happen by the time futures open on Sunday night. And the other thing I did was I did SOXS shorted. So SOXS is the inverse of XOSL. So you can do SOXL long. So this one was a 30% move from Monday to Wednesday. So this was actually longer. It lasted more than a week, pretty much. And then yesterday, you see the weakness start building up. You're like, okay. You already see the weakness already coming through because we already hit resistance. So last night I talked about it, like all these lines up here. So if you look at SMH, the ETF for semiconductors, you could see right away there's a bunch of resistance on top here because we got two tops here. And this area was the last blow off. Okay, back in June, and right here it gapped down here, so this area, I could draw a line here. This whole area is important, and we're above it. Now, I did a quick short. I'm out of this position 100%. I'm done. Okay, I did a quick scout. That's it. Just do a quick from yesterday to today, quick, or even 2 days ago, I guess. Yeah, I actually started entering Wednesday. I added more on Thursday, and then now I'm out. So I got my what I got there. Will it go down further? Well, there's no earnings on Monday. I don't know what's going to happen over the weekend, so I'm just going to be like, whatever. I'm done. I'm not going to be greedy about it. But definitely, when you look at the QQQ NASDAQ right now, okay, market's closed. So we got this. We're almost at the top right here, right? And SPY, we're already above the top. So you would expect some kind of pullback. I'll play a video with Joe Rabel. He'll explain what he expects after I play this next video for you. So this one is about breadth. So we're looking at the market conditions underneath.
This morning, Schwab Asset Management CEO and CIO Omar Aguilar. Omar, happy Friday. Good to see you.
Good to see you guys.
What do you make of the action, the price action, and I guess this surge of best 8-session rally in a few months?
Yeah, well, it is interesting. I think the rally we have seen so far this year, it's been a little bit disappointing that the lack of breadth again of the entire market. We were expecting a little bit more of a broadening of that rally across multiple areas, across the market cap spectrum and a lot of other sectors, and we still see that concentration that we observed for most of the part in 2024. So that obviously is a little bit concerning because of that heavy concentration on mega caps. That being said, we're still in the early part of the earnings season. I think we expect a little bit more of opportunities to go beyond just those mega caps as corporations predict their earnings. We're very optimistic about the fact that the economy seems to be extremely strong, and overall between consumer spending, between industrial activity, manufacturing activity, and increase in productivity, everything seems to be going to the path of economic growth that is pretty solid for 25.
We took note of the president's jawboning of the Fed and OPEC yesterday, and oil certainly is on pace for its worst week since November. But I wonder if you think that's going to weigh at least on the tone of the Fed presser next week.
Yeah, well, it's a great question. Our expectation is that there's going to be a little bit, if not no change on the Fed on decisions on rates for next week, and also even on the tone as well as on just the overall framework. Our expectations is a lot of what the Fed might do next week will be in these. We're waiting. We're looking for data. Things are going according to plan, and therefore we're going to just look at what happens going on. I think the view on the Fed seems seems to be moving more towards growth and less on inflation. I think that's going to be a little bit of the interesting change of pace. We would expect that the Fed will try to stay away from any political, controversy, and will just stay with the statements around we're going to look at data, we're watching inflation, we're looking at economic growth, we're looking at how interest rates move all along. I think what is interesting, Carl, this morning is just the changes that we have seen in other central banks, and therefore that dynamic that we have seen on currencies that is new, that we hadn't seen, in the last couple of years. So with Bank of Japan, increasing rates, that puts a little pressure on the dollar, that actually goes back a little bit of that inflation.
All right, so last night, so that's why the stream late night to see like if the Bank of Japan did anything. So, after I left, 1 hour passed, didn't do anything. So whatever he said, Ueda, the Bank of Japan chairman over there, no effect. No effect. I didn't see any effect in the market. No crazy volatility spikes. So we're safe for now. So the only thing we're looking for is a pullback. All right. And if you look at here, so I drew that purple squiggly line last week. And yeah, pretty much on point. Like it did this. So we're here now for micro strategies for 353. I expect the same kind of look for the Nasdaq to follow that. I don't know what Bitcoin will do. If it has a harsh pullback, this won't hold. Yeah, you can see micro strategies go all the way back down to 300 again. Quite possible if Bitcoin just doesn't follow through. And I think that will depend highly on what Jerome Powell says, less on what earnings are for big tech. And we're going to have to look at the earnings for big tech after we're done with this video here.
Mechanics that the Fed might be looking at.
Given that growth dynamic that you've outlined, what do you think needs to happen in order to see more of a broadening effect in the, ex-Mag 7 and maybe some other names part of the market? What do we need to see at this point to actually get that broadening that you've been anticipating?
Yeah, well, I think the investors seem to be still, fairly concerned about the potential implications on inflation and the implications that we have on real yields on the economy. I think when you look at the fact of where we are, real yields were, and if we don't see diminished levels of inflation, at some point that has a higher impact in the smaller names and mid-cap names than what it is on the mega caps. Mega caps, as of today, continues to just be a sign of a stability, and therefore investors are still looking for signs that that real yield will eventually just subside, and therefore you will be having less of an impact. When you go into the next phase of the economic cycle and recovery, that's when you see that mid-cap, small cap, and value more like cyclical recovery. We saw a little bit of that at the end of last year when we saw some pieces of a small cap outperformance. We saw some cyclicals outperformance. We saw that momentum shifting towards industrials and financials towards the end of the year. That is sort of the early signs of that economic cycle that is less interest rate sensitive and then tends to be just more looking forward to the expansion of the economy. We're not there yet. I think the volatility in yields seems to be the biggest driver of why we haven't seen that broadening. I think we need to see a little bit of stability on that expansion of the economy. We're not there yet. I think the volatility in yields seems to be the biggest driver of why we haven't seen that broadening. I think we need to see a little bit of stability on that sort of middle part of the curve and the long part of the curve to just see a little bit more of the equity rally.
All right, interest rate sensitivity. As we know, I've been harping on that for quite a while. So let's look at the earnings for next week. Let's look at the calendar here. Okay, so you guys need to know this. This is a big week. This is the real week of earnings. Okay, you got AT&T here, SoFi. Yeah, okay, that might be important. Not really though. Nucor, Steel. Some more banks, regional banks. Okay, maybe might be important, but I think the big ones will be Boeing, Lockheed, Raytheon, so RTX, LMT, BA, General Motors, of course. Okay, and then next Starbucks, yeah, that might be important. SAP, okay, yeah, those two. Lending Club, that's actually an interesting stock. I haven't looked at that one in a while. I might have to see how that one goes. Logitech, kind of a small player, but yeah, a little bit of a tech vibe there. And then here comes the big boys, ASML. All right, big, pay attention. ASML, very important for semiconductors. That'll be the first one. That's Wednesday morning. Okay, so after we get through Monday and Tuesday, we got Wednesday. That's where the big boys is. And then we have Jerome Powell in the middle. 11:30, he'll talk my time Pacific, 2:30 Eastern. All right, Jerome Powell will talk, and it will affect everything just before we get news from after the market close from Tesla, TSLA. We got Meta, right? We have Microsoft, MSFT, and then you have Lam Research, LRCX. Oh boy, big tech players here. LRCX will pair with ASML for semiconductors. And then we have IBM. IBM, yeah, that does have an effect. I know it's old school, kind of a big blue chip, but yeah, it will have an effect too if it does badly and all of them do badly. If all of these do badly together, bye-bye NASDAQ, bye-bye. And that's on top of whatever Jerome Powell says. So Wednesday is going to be a big deal from near the close until after the close. And then Thursday, it'll either be big green or big red to follow through on what happens on Wednesday. So, no idea. UPS, yep, that'll be important. See how people ship, that's a big transportation one. And then you have Caterpillar, definitely something people have been eyeing, especially with more infrastructure to be done for data centers with the AI spending. So Caterpillar, something you might be interested in. So if it does badly for the next quarter, might be a place to start buying. I don't know. Let's see what Caterpillar does in the morning. And then after the close, so whatever's happening in the morning for Thursday, it'll get continued on into the close for Friday because we have Apple, AAPL, Intel, INTC. You got CLAC, KLAC, minor semiconductor player. You have Visa too. Yeah, I mean, generally Visa is kind of like a no-brainer. I don't think it'll shake up the markets. And then after that, you'll start having a little bit more oil and gas companies. So XOM, CVX, and PSX. So Phillips 66, Chevron. That'll be Friday morning. But mainly, it's Wednesday. Wednesday into Thursday. You'll know where the market will go by then. And whatever Apple will say and Intel will say, well, I don't know. I don't think it will save it. If we're deep in the red by Thursday, Apple and Intel together better say something really good. Intel's still looking for a CEO. Big problem there. I have no faith in. Usually Intel earnings are terrible reactions. Apple is a mixed bag. Sometimes they say good things, bad things, but Apple so far going to earnings has been going down. So people are already kind of bearish on Apple already anyway. So maybe it'll pop up. But in any case, got to get ready for Wednesday. All right, guys. Prepare yourselves for that. Now, I'm going to play this video to talk about how we should view the scenarios going into next week. All right.
This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabel. I'm going to give you a stock market update, and we're going to take a hard look and see what this new high in the S&P actually means. I think there's some things we got to keep an eye on, and I'm going to talk about kind of the confirmation I'd like to see, especially on the weekly and the daily, in terms of indicators that will give us a little bit more comfort in knowing that this could continue for a little bit. All right.
Okay, let's continue here. Let's go.
Still down.
Ad.
It's a like button and also subscribe. Okay, let's start out running through the market conditions for the S&P. We've got the sentiment, and it's still down. It's at plus 15% more bulls than bears, which is a jump from last week. However, we got to keep in mind that this when we were up here, it was at plus 47, 48. All right, and it's dropped down significantly from that peak.
So that explains to you why Monday, before we got shut down, that was like Monday the 13th, right? And Monday the 13th was the best time to buy, and that was a reason. the sentiment was very low. I bet you a lot of people bought tons of puts at that low. And that's why you see the movement we have now. Now it's like shifted all the way to the other side of the boat. People are way too bearish on that Monday, and now we moved all the way back up. Okay.
So it's definitely considered more on the bullish side. We're still in a bull market, and when you get a monster drop like that in the number of bulls versus the bears, you got to view that as a positive. All right, so that's how that's set up. Now we have made a little bit of a jump in the RSI 5 on the weekly. It's up at 67, getting a lot closer to overbought again. So I've got that at neutral. It hasn't actually reached there. If it crosses that threshold, it will move to negative. Now the volatility did show some changes. The daily is back to neutral. The weekly is still negative. We can see here on the right. I'll go through that in a sec. And then the trend for the for both the monthly and the weekly is still positive. The daily has moved to neutral. It's very, very close to turning back to positive. And then we have the momentum on the monthly is the only one that's still positive. The weekly and the daily are neutral. Daily jumped from negative to neutral this week. All right. So let's just talk about this for a sec. What's taken place here is we've had a little bit of a drop in. So you can see the size of these bars has stalled out. Now you can also see there are gaps. So you want to fill in the gaps to recognize the true size of the bars. That's a true range, right? So this was actually a pretty big bar here. So that's what the average true range means. All right. Now, if you think about it, this is dropping and we're overbought. So if we can get an orderly pullback towards the 18 or in that area, 2 to 3 day pullback, being overbought, the likelihood is this is going to drop and roll that down, and that could represent a really good opportunity, maybe somewhere around the 600 mark, if it does it in an orderly fashion. All right, if we get one of these kind of bars, then this is going to jump up again, and this is really not what you want to be seeing after a strong move like this. You want to see orderly, 2 to 3 bar pullback back into here. Now, when we switch over to the time frames, I'll go into this in a little bit more detail, but I just wanted to show you this because I do think if we work this back down to neutral, 50 or lower, and this and it's orderly, then this line is probably going to roll over and turn to positive, meaning the volatility is dropping at that point. And that could represent the first decent short-term buying opportunity in a little bit. The weekly is still showing, high volatility at this point. Now, I want to clarify something, make sure you understand. When we're going up, all right, with high volatility, it doesn't mean that it can't keep going up. It can keep going up. We've had periods where we've had high volatility and it's going up. What it's saying to me is that it's a much tougher environment to make money as a trader. All right. If you're trying to get in and get out, the volatility is higher. And that means that you can get stopped out a little bit more easily on both this time frame and this time frame if this is rising. All right. So you just got to be a little bit more careful. Now, you can pick your spots. When we get pullbacks, we can take advantage of it and try and get this deeper. And as I've been saying all along, this doesn't mean rising volatility doesn't mean you can't trade. We're just looking for better entries. All right. Now, so I just wanted to make sure I clarified that you can keep going. You can keep going up. It does signify a higher risk that the market can turn, but it can keep taking place. So the problem you've got is trying to stay in. If you use stops, if you're disciplined about your entries and stuff like that, you might be okay. But if you're getting in and your entries aren't really good and you're playing with tighter stops, the likelihood is that you can get stopped out when you're in a higher volatility environment. All right, let's switch over and start looking at some of the time frames. Nothing's really changing here on the monthly. We've had, since the beginning of 2024, we've had 3 red bars, okay? One here, one smaller bar here that held the 4, and then another small bar that also held the 4. Now, we've gotten this trying to create another reversal to the upside. The negative I see with this pattern is how long it's been since it's come down and touched the 18-month. We've had periods like this before So it's not completely unusual for this to take place, but we know that we're getting close. You can start going back historically and saying, it's before too long, we're probably going to work our way back, especially when we're this far away. So, it's January. Most of the time by March, we start to see this pattern sort of working its way back. After a strong year, sometime in the first quarter, I would expect some, backing and filling, consolidation back, something like that. So kind of keep an eye out for that. The open for this month. Every month, once we get above the open, you want to keep a really close eye on them, because if we go from green to red on a candle, that'll be pretty important, I think, at any point here for the next few months. All right, the weekly chart. The price chart looks fine because it had an abrupt reversal after gapping down and reversing back up. But we still haven't seen any improvement. MACD is still below its signal line. It is operating off of a reverse divergence I mentioned last week. So this didn't make a lower low here, all right, but this did. So we get this sort of positive short-term trading pattern that develops within the context of still a divergent DI and a divergent ADX. All right, now if we get this to pop, then what I would be on the lookout for is a climax move where we make a move to the upside and we get some form of a climax to the to make, the market makes one more last gas move to the upside. So I'm kind of anticipating a little bit that is the potential to keep a close eye on what could take place, because we have this short-term positive developing with the MACD, and we still haven't seen a significant amount of improvement. But it's very possible, if this shows more strength, green DI is going to pop here and keep going, and potentially even take out the highs from before, and then that could get this ADX going and maybe make you think that we're starting a new move to the upside. We just don't have the right pattern in place to consider this a low ADX breakout. This doesn't have that. The QQQ is a little bit different. It's been going sideways, but this has been working its way up. Even the QQQ really isn't something I would consider to be an attractive low ADX breakout. It's a little bit closer than what we have here. But if we make a move to the upside, you got to be a little bit more careful as it plays out. So we'll stay in tune with that as it takes place. So what I'm looking for on the daily chart, I think is important to keep an eye on. We've made a really strong move to the upside. We've made this 18 start to rise. Now, it's not above the 40, but when the 18 is rising, we want to see a test of that line, and we want it to be orderly, obviously, to keep that average true range rolling over. All right, now if we get that orderly pullback in the form of two lower highs, then you're going to get a pinch play taking place here as MACD is crossing above. What else is going to take place is we're going to get this green DI to come back and test 25, and it should stay above. If it plays out that way, green should stay above 25 and it should stay above the red. So if we have that, we're going to have sort of our first real setup using the indicators where we get a pinch play here with green DI crossing and holding above. I think the likelihood of it crossing and breaking out would not provide as good a signal. Meaning if we moved up here and can keep going up, this kept going, yeah, you could, theoretically you could create a pinch, but it's going to be really far away from the 18. So ideally, we really want to watch and see a little bit of a consolidation. Now, it might follow through a little bit more, but the other thing we have to watch now is for a failed new high, all right? A failed new high would be, we're hitting a new high right now, okay? Green DI is not confirming. This is crossed above, but the MACD signal line has not. And then we get red bars, big red bars coming back down, especially through the 600 mark. If you have that, then this would be a failed new high. This is likely to cross back over through the signal line, and green DI is likely not to hold. Red will move back up. So if it were to take place like that, then we know they're most likely in a trading range and not the start of another big leg to the upside. So these are the kinds of things that I'd be watching here. We really, ideally, if the market's ready to keep going, we should have maybe a little bit more follow through and then an orderly pullback, a 2 to 3 bar pullback would be ideal in this situation. Now, it's possible we could have an orderly pullback that just overruns a little bit and causes this to be more of a breakout play. So I'm giving you all the different scenarios that could take place. What we want to avoid are the monster red here, and there's two reasons for that. Number one, you're going to hurt these indicators, and number two, you're going to create high volatility if it takes place that way. If we get any form of pullback that keeps the average true range rolling over and keeps this above the signal line, keeps this above 25, I would say that's very, very positive in the near term, and we'll probably get upside continuation. And that really could lead to confirmation on an ADX basis that is probably going to lead to some kind of a climax. All right. Now, just lastly, we'll take a quick peek at the ADX on the hourly. We've made a really strong push, 18 and the 40 moving up at a strong rate together, and we have true confirmation on an ADX basis. So we could go through a little quick ABC kind of pause here, and it won't really hurt this. But we want to keep an eye out for a violent reversal, which would cause red to overtake green. So these are the kinds of things you want to be watching right now. Let me know if you have any questions. Thanks.
All right, you guys got the scenarios there. So you don't want to see them big red bars, right? So next week, you already know what's going to cause them on Wednesday. Powell. Earnings. Big tech earnings. That's it. That's what's driving the market. Okay, so let me give you a little mini lesson of the day. And I think that'll be it for that. We'll do a little short stream today, but give you a little mini lesson. And because the reason why I'm going to do this particular mini lesson is because Bitcoin did very interesting things all week. And it's a very good example of a lot of stuff that you see in the Wyckoff. Okay, you're going to see that. Actually, let me see. Yeah, this one's too dirty now. It's way too messy. But you can see like the tops here between 106 and 108. So I'll redraw all this, clean it up, because there's too many lines. I don't need all this stuff I'll use the Coinbase chart here. I didn't draw a lot here, I don't think. Yeah, I didn't draw too much on this one. Yeah, you see this one? This bar back in December 5th. So if I zoom in, you can see like high volume, and then you have this crazy movement where most of the body stays here. And then this is a daily chart, by the way. And then you see the two wicks. So it was an indecision, right? It couldn't decide where to go. But the range of this bar gives you pretty much the idea of where most of the price action is going to stay from this point on forward. So you could tell right away, it's just like we've been staying within the bounds of that bar set on December 5th. So that's how you could tell. You see, look at the high volume. That's the biggest volume candle until we hit here this Monday, right? With the executive orders that Trump did and his inauguration. So before that, we didn't have anything until we hit that bar. Anyhow, let me give you this too. So we can draw like a line here, right? So this area set by the last high in December 17th, that was the last final high. And you can see the executive order hit that, comes back, and then, the final, well, this was the rumor of the order, and this was actual signing of the order, right? The day after. But eventually, like, yeah, you can see like it still respects this top. It really can't get above like 108, right? 108,000. So that's important for you to understand. And from here, I'm going to show you like this is the next bar right here, which has a good volume, like, yeah, second place, right, compared to this one. And you see like it also like has a little range here. So it's setting up another range here. So we're trying to make a higher range up here. And if you're a bull, you would think, oh, okay, it's just working it off. So by next week, if Jerome Powell says good things, pop, we'll just break out of 108 and go to a new high, right? And if that does happen, watch for the next move down right away. I don't think it'll last through February All right. So watch for that next pop. And then if you were looking for a real big short, you really want to short it, that's what I will be looking for. Seeing how high it could climb up to that level. And we'll need the DeMark indicators for this to help you out on that point. And we'll go over that next week when we get to that day. Okay, get closer to that day, because it'll be interesting to see. But for now, I can't be bearish. I have no proof as of this moment. This is actually making higher lows. So I'm not going to say it's going to, next time it hits 108, it's going to completely collapse right away, just like it did here. No, there's no sign of that happening yet. Not yet anyway, right? Like compared to here, this was like very quick, very sudden. If you zoomed in, if I looked closer to this point in that day, I remember that day quite well. This was when I jumped off of MSTR. I was just like, oh crap, get the heck out of here. You can tell like a little bit from the way it was moving that it was just growing and growing in resistance. Like it was having a real tough time having any follow through once it got up there. And once you have this red candle here, and then it respected, that red candle was respected in the next 3 bars here on, this is a 4-hour chart. So I zoomed in on 4-hour. Then after that, it was just easy just to like, you can see everything rolling over. The moving averages start rolling over. You're just like, oh shoot. And then you come through this, the dashed line where I drew that range. Like once you fell through back into that range, you're just like, oh yeah, Bitcoin's not going to respect it. Now here, look at that. We've been going around that range, right? So that dashed line. So we're making a new range respecting the average of that line, 104,000. So this time's a bit different, right? Even though it's quite violent, at least it's trying to hold it like close to it, like a magnet right now. So I can't say it's the same thing as we saw in December. So I can't make that same conclusion. However, when you zoom in here, you see it's making these kinds of like moves up and then pulls back, move up, pull back. And if I go further down a 40-minute chart, like you can see it much more clearly. Goes up to resistance, pulls back. Goes up to resistance, pulls back. Goes up, didn't really get very close to resistance, but still it's pulling back, right? And then jumps again. So when you see that kind of pattern, that's a creek. These are creeks. Supply is being absorbed here. And this is what I'm doing to introduce to you the article. Okay, so we're going to talk about the article now. So hopefully you got that. And I put that in the description. So the article's in the description. So you guys can go and read that at your own leisure after I read it. But yeah, I can put it in chat too. All right, there you go. Okay, I'm putting up my music. So I'll play it with the music. Okay, so we'll play some music. All right, everything's set up. Okay, now I can present my screen. So this article is called Jumping the Creek. All right, Bruce Fraser. So he's in charge of the Wyckoff Power Charting blog on stock charts. This is a free blog, and there's tons of articles all the way back for years. This was written in 2015. A little over 10 years ago, basically. Prices behave differently when a trend begins. Each price bar tells a story during the sideways action of an accumulation range, and each bar tells a different story when the trend starts. A big, long trend is born inside the inconspicuousness of an accumulation area. So that range we're in Bitcoin right now, that could be accumulation, maybe. Or it could be distribution. You never know, right? Like we're just starting this thing this week. I haven't really decided if this is just a prelude for it just rolling over and dying. Like we could have a big blow up top, right? Going up to the top. And that'll be a better time for you guys if you wanted to short. That'll be the time to be shorting. Not now. This ain't it. If you're doing shorts now, it's going to have to be short duration, like I did with MSTR, shorting it. I just did it like really quickly, like within 2 days, a few days, maybe just 1 day even. A lot of times it's just 1 day and that's it. You got to leave it because I'm not convinced the long thesis is over. All right. So anyhow, let's continue. The keen-eyed Wyckofian is able to detect this change in behavior as the trend begins and initiate a campaign in the stock. In accumulation range, the forces of overhanging supply keep the price of a stock suppressed. Supply is not a linear phenomenon. Selling does not always arrive at a constant price of $50, as an example. Great market operators understand that big supplies of stock will materialize and stop the advance of the stock price and cause a return back to support levels. Each attempted rally can be met by supply at different price levels inside the accumulation area. Robert Evans took the helm of Wyckoff Associates, which became the Stock Market Institute in the early 1950s. He was a master Wyckofian and a great teacher. He used memorable analogies and storytelling to convey important concepts. The colorful creek story conveys the nature of overhanging supply in the trading range. He tells the story of the Boy Scout hiking in the woods along the banks of the creek. To continue to his destination, the scout must find a place to cross to the either side of the creek. But the creek supply of stock is too wide and running too fast for a jump to the other side. So he meanders along the creek and at times walks away from the banks and then returns to find a place to cross. Eventually, the creek narrows enough that the Boy Scout determines that he can jump across if he gets a good running start. At this narrow place, he backs up away from the banks of the creek, gets a mighty running start, and leaps across to the other side. The momentum of his run carries him away from the opposite bank. He then decides a rest is needed and returns to the creek, takes his shoes off, and puts his feet in the water. After his rest, he resumes his journey away from the creek and onward. The creek no longer represents a barrier resistance on the journey to his destination, higher prices. Well, that's a very colorful story, right? I think, yeah, that's a very good analogy. Okay, of course, the creek story is about the overhanging supply of stock for sale that keeps prices from starting their upward trend. A dramatic event is needed to put prices on the other side of the creek. A creek meanders through the forest, running here and there, while becoming wide and then narrow. The supply of stock works in much the same way. A wavy line can be drawn over the price peaks where prices are turned back down by selling pressure. It looks like a creek. There will come a place where the stock will back up, a spring or last point of support, get ahead of steam, and then leap to the other side by absorbing the remaining supply. This leap, or jump, as Mr. Evans would call it, has a signature characteristic of widening price bars and a surge in volume, the required energy to overcome the remaining supply. To a Wyckofian, these attributes of price and volume are different than what came before, and this indicates that a trend is emerging. The composite operator is embarking on a long-term campaign in this stock, and the Wyckofian analyst can see this in the change of price and volume behavior. It is the time for action. Often a creek will split off into two, a lower creek and an upper creek. Accumulation ranges will often have two supply areas, two creeks that must be crossed. The resistance line is often the price area where another surge of selling will materialize and stop the price advance. Once this resistance area is overcome, the stock will have cleared the entire accumulation area and will be emerging into an uptrend. So yeah, we can look at this. Doesn't that look quite familiar to you with that Bitcoin, right? Goes up, comes back down, goes up, comes back down, goes up, comes back down, goes up, comes back down. So you see all these creeks. these little red areas that were moving down. So the red candles, the downward pressure, right? Once it meets supply, people selling, then we have to pull back and find new people to buy. Goes up, we meet selling pressure. We have to come back and meet new people to sell. Eventually, we spring out of it, and we have this next larger candle up here, and then we finally break out all the way back up to the final resistance that was set by the first longer range area at the beginning. So that's what we're looking for at Bitcoin right now. We see all these little creeks being formed. I don't know how long this will last. It could last all next week, even after Jerome Powell. Who knows? If it stays in that range, then we will have to assume, right, that potentially it may break out, or it will fail altogether and break down. I can't tell that. I can't tell the future. I gotta see how it goes as we move along next week. Okay, so supply is like a meandering creek that flows and exerts pressure on prices throughout an accumulation. Sellers of stock are willing to put supply out at lower and lower prices. This can give the chart a particularly bearish look. Ironically, as the composite operator is accumulating shares, the majority of the public is becoming ever more pessimistic towards the stock. The jump, JAC, jump across the creek, and the backup, BEUC, backup to the edge of the creek, are bell-ringing events on the chart. They indicate the readiness of the stock to start moving upward through the resistance line and onward. So right here, the JAC, BEUEC, got that. Okay, so and then we have another example with Chevron here on this one. So same thing, a little bit different, right? So this one, you have two creeks. You got that lower one, you got that upper one here, and then we finally break out. Yeah, so you're looking for these patterns. When you're looking at range, you want to look for these patterns, all right? All right, put back up the banner. I think you guys can read the rest of this yourself. Like, he gives more examples, but I think you have the fundamental idea. And put up the link back up on screen for you. All right, so let's go back and wrap this up today. So it's gonna be a short stream because there was no major updates to give. I'm gonna cover a few more stocks. Oh yeah, gold was doing pretty good, and then China was doing pretty well too. So I noticed that. And I'm gonna put this up for you. SOX L, SOX S. So hopefully you understand. So these are the stocks. Oh man, let me clean this up. Okay. Okay, so these are the ETFs I use. All right, here you go. Okay, so let me double check this is right. So XOXL, that's bull semiconductors. XOXS, bear. MSTX, bull. MSTZ, bear. All right, so those are the ones hopefully you understand. And then I'll play some videos of the past. But first, let me show you what stocks you should be looking at. So I talked about Moderna before we got shut down, and then sadly I wasn't here. I would have told you guys to get Moderna just when it was announced to do they were going to do the AI like vaccine stuff for cancer. Man, this was right during that Monday too. I was looking at Moderna, so mRNA, and I was like, whew, man, look at this. Man, this looks like a buy. And then once Tuesday hit and started jumping, right, I was like, oh shoot, just get in here. And it was just like a quick flip. Now we hit this top area, so we're stuck here again. Is this a bottom already being formed? Like, we got this, like we see this area. This could be an accumulation for later on this year. I don't know what's going to happen in earnings. I don't know if I'm going to risk that. Earnings is February the 14th, but yeah, this could be a play longer term, like for the rest of the year. This could be a really good longer term play. I don't know yet. I'll have to look into it. The next one is RXRX. Okay, RXRX. Yeah, we've hit 8. We pulled back, so it's doing this goofy thing, and oh yeah, I mean it's trying to do that. Yeah, follow Moderna up because it does do AI drug research, right? So this would be a perfect stock to follow this up. But again, I have no clue if we're gonna get the rates for the bonds to decrease. That's gonna depend on Jerome Powell. All these rate sensitive stocks. That's what one of the videos was talking about, like Sound, same thing, SOUN. All these things are rate sensitive stocks. Twilio had some pre-released earnings. I have no clue why they did that. They're supposed to have earnings on 13th. I think they still will be there, but it's bouncing. Twilio, TWLO. I've been watching this for a while since it's made its little bottom in 2022. So last quarter, basically, the final quarter of last year, it started pumping. I'm like, wow, look at that. This thing could be a big recovery stock. I don't know if it's going to get all the way back up to 400, but yeah, I got to watch this thing. Twilio, TWLO. Amazing. It's really turning around. Really turning around. Because last time I played this was here. Right here when it was like $28, $30 and went up to like 150, 160. So yeah, we're almost back at 160. Shoot. Must be doing something right. All right. What's the other one to look at? QI, Chinese stock, or IQ. It was IQ. I think it was IQ, right? IQ. So symbol IQ. Yeah, it was up today on something. I don't know if it's just up because of China overall was going up today, but it definitely. You see that? It's been making at bottom at $2. And now it's back at 2.25 cents, $2.25. Ooh, could be something interesting. I gotta say, yeah, could be something interesting. Let me see. Yeah. KC. Oh man. Well, it looks like it's not going to 7 like I wanted. It jumped up today, 13%. Oh, can't get back into there, huh? It doesn't want to. Okay. And then, of course, we have JKS, solar panel maker, solar maker right here. It's back to 20. Yes. Okay, I'm watching this. It has earnings coming around the corner, too. But it's a while. It'll be March. I don't know. It's pretty risky. But, you might take a flip, take a chance, go from 20 to 30, 50% right there. So JKS, I don't know. I'll see if that's worth it. I'll see on Monday. I'll say like, yeah, jump in. I'm waiting for Trump to say something bad about China just to crash it a little bit more, but all right, I don't know. Maybe it won't happen. Yeah, I'll make a quick trade on that one. See anything else? Yeah, we got the these quantum computing ones. Yeah, so Martin Scully's probably hating this stuff still. So it's RGTI kind of recovered. QUBT kind of. RGTI did the best out of. I don't know. I don't touch these guys. You guys could probably trade them, but oh man, IONQ looks. Yeah, dude. Okay, let's see what happens next week. Definitely next week's gonna be important for these guys. If Jerome Powell says something bad, this thing will just like really just shoot all the way down. Like if you wanted to short something, yeah, short this stuff. For if you're really bearish on Jerome Powell, just do it. Planet Labs. I don't know. There was some kind of news, I guess, huh? Let me see if TradingView has anything. Did it have news? What news? What news did it have? Was there any news? No. Man, I keep forgetting how to use this dang thing. It should have some news, huh? Oh, it was just upgraded? Was that it? Huh, come on. That's it? All right, whatever. I guess that's enough to make it pop. ASTS, another space stock. No, nothing there. So Planet Labs is PL. PL, by the way. All right. So it looks like it kind of did a little test, right? It just broke out of 3. Okay, and then pulled back into the January 13th. Now we have this big pump, and I guess it's just following the market, and it got this like little upgrade. Very convenient timing there. Rocket Lab still stuck in this range. Lunar, LUNR. I think this is Intuitive Machines. Yeah, Lunar. I just call it Lunar, LUNR. So yeah, I don't know. Nothing there. But it's all gonna depend on Powell if I'm gonna really believe it. Oh yeah, another one is hymns. Hymns. Okay, it's been in this range, right? It was in this range. We're breaking out again, trying to break out again. We tried it already in November. We're stuck in this range. And I'll tell you, if you look at small caps, IWM, right? Stuck here. This was Jerome Powell's fault, right? This big bar. Big red bar here. Right? Negative 4.4% right here. And we're back up here before. So, like, if you want any of those stocks to keep moving up, this is XBI. Yeah, the biotechs. This was already going down before. Like IWM and XBI, they were already going down on the bond yields going up. So this was already going down already into Thanksgiving. This is not convincing me. If this didn't happen, I would have been all real mega bullish on that stuff, but it's not happening. All right. Okay, so I think you guys got an idea for that, and I'll come back later if I remember any other stocks to mention. Yeah, the nuclear ones, no, those are too volatile. Can't talk about them. ACHR, the vertical and takeoff and landing stock, yeah, still okay. So it's not really dead yet, but it's gonna be dependent on Powell again. Very, very sensitive. This one will be very sensitive, Powell. NVTS, we're still bouncing in this range. See, between 3 and 4. So nothing, no recommendation there either. Nothing I can say, yeah, right now, except to just keep trading what I told you guys last time I was here, and I last night, if you want to go look at last night's stream, I recommend some potential long-term positions. So not for trading, actually buying and holding. So if you look at before we go, do a little Chinese stock here. Xiaomi, XIACY, back at the resistance of 23 and whatever. So yes, the trend is holding for this particular Chinese stock. Very important Chinese stock, probably one of the few that have nice trends like this. So definitely I'm going to have to watch this one too, see if I recommend it. And let's go back to gold. I'll talk about gold. So we're still at the bottom here for gold and silver. Nothing major yet. I don't see anything major yet. I think GDX still trying to get to 40. I don't know if it will. We'll see. So KGC is one of my favorites. Okay, I gotta worry about earnings. I think NEM will be NEM is not gonna report yet until February 20th, so we got some time. Don't know. This one had a big falling out of the bed last quarter. Yeah. Okay. I think that's it. The other one that I talked about, Pacific Gas and Electric, PCG. California Utility, yeah. So I told you to take your sweet time buying it up. So if you can get it at 16, just chill out, see what range it forms. We're still at the early stages of building a range right now. EIX, Southern California. This one is more dependent on the wildfires. So again, buying it at 56. So take your sweet time, no rush. Don't need to rush it. EIX, Edison, International. Okay, that's about it. For those two utilities, I mentioned the two of my favorite ones in the previous stream, Texas and nuclear and natural gas. So check the previous stream last night. Go to that one. Okay. Actually, I'll put everything. Tell you the playlist. Let me see the playlist. In the playlist. Okay, here's the playlist. Let me see if the playlist got updated. So yeah, always check the playlist to show what, and also check the dates too. Yeah. So yeah, here's the playlist. Okay, guys, that's the playlist. So the top one apparently was my last night's stream, since I created that. First. Okay, so yeah, just check the dates. Make sure you check the dates when you go check the playlist. All right, and yeah, support Portia, and there's an email for me, so you can send me emails to our company email right there. So it's crack, CRACK at jghb.info. All right, and donate to Portia. Portia J, PORSHAJAYE. So hit that Cash App, and then just PayPal, Portia, PORSHA at jghb.info, and you can email her too using that. So, all right, I'll see you guys next week, or I don't know, maybe I'll have something over the weekend. I have to see if there's another lesson to give. See if there's another lesson we can give that and do everything. Oh, and yes, I will try to study up on my not Wyckoff, the DeMark indicators. Okay, because that's going to be really important as we move along this year to figure out where tops and bottoms are in a more accurate way, hopefully, if I learn it correctly. So let me go back to the screen. I'll show you what I've been doing here. So you look at the semiconductor one, right? So this has been pretty good. I put it 78 minutes. So I'm using the ETF SOXX. So semiconductors kind of leading the NASDAQ up, thanks to that $500 billion AI Stargate program and other reasons. But yeah, you can see this moving up, and we got the 13, and I see the C5, and that was the top. So pretty good at finding things out. I think if I goof around a little bit more, figure out how to read these things. This is pretty esoteric. And I'll do the SMH so to show you. Pretty similar, right? Yeah, okay. Not bad. You got the C5 here, 13 on this one. Yeah, not bad. Looks like I can figure out something. Hopefully, yeah, I can use that to help you guys out, figure out where the tops and bottoms are more accurately. That'll be really good. So anyhow, I'll see you guys.
Feel like I should go. 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 Feel like I should. Feel like I should go.